Hey everyone, welcome back. Are you struggling to keep up with the latest tax law changes that could impact your wallet or your business? Don't worry, I've got you covered. In today's video, I'll break down the 3 most important tax updates for 2024 so that you can stay informed and stay ahead. The first big tax change: new exceptions to early withdrawal penalties for retirement funds. These changes are part of the Secure 2.0 Act that passed in 2022, but the new exceptions to the early withdrawal penalty didn't go into effect until 2024. These exceptions could benefit you if you have certain types of emergency or life-changing situations that require you to take money out of a retirement account. The new rules allow you to avoid the typical 10% early withdrawal penalty. Here are the main requirements for the new 2024 early withdrawal penalty exceptions. For domestic abuse victims, no documentation is required as self-confirmation is accepted. Up to $10,000 or 50% of the vested balance, whichever is less, can be withdrawn within 1 year of when the abuse occurred, with a repayment option within 3 years. The next is disaster recovery. You must have an abode in the state where the disaster occurred and have suffered financial loss due to the disaster. Up to $22,000 can be withdrawn within 180 days of the disaster, with a repayment option within 3 years. Emergency personal expense. A written statement to the plan administrator is required. Up to $1,000 once every 3 years can be withdrawn, or every year if certain requirements are met. Separation from public safety service. There's no specific amount limit. It's available once you separate from service and have turned 50, or once you separate from service and have at least 25 years of service. The last one is terminal illness. A doctor's statement must be provided that the illness can reasonably be expected to result in death within 7 years. There's no specific amount limit. One interesting note is that for the emergency personal expense exception to apply, you must need the money for personal purposes of meeting unforeseeable or immediate financial needs relating to necessary personal or family emergency expenses. So, this could be used for a wide range of needs. Additionally, you can use more than one of these early withdrawal penalty exclusions during the same time period if needed. As a side note, there will also be a long-term care exception that will take effect in 2026. With that exception, you'll be able to use withdrawn retirement funds to pay for long-term care insurance premiums. The second big change: beneficial ownership information reporting requirements, or BOI. Starting in 2024, any newly formed business must file a BOI report with the Financial Crimes Enforcement Network, or FinCEN, within 90 days of formation. Existing businesses will have until January 1st, 2025 to file the report. The BOI report is used to disclose the identities and contact information for all of the business owners. I've written a complete guide on these new BOI reporting guidelines to fill you in on all of the details about who should be included in the report, as well as how and when you must submit a BOI report. I've included a link in the description below. The third big tax change: NFTs taxed as a collectible. An NFT, or non-fungible token, is a type of digital asset that gives the owner a unique digital certificate of ownership. Starting in 2024, the IRS will be taxing NFTs that have been treated as collectibles differently than other types of digital assets. To tax capital gains from the sale of NFTs, the IRS will now use the maximum capital gains tax rate for collectibles, which is 28%. This is higher than the 20% rate for other types of capital gains from selling assets. Since the IRS classifies NFTs as digital assets, you'll still need to check the yes box to answer the digital asset question on your return. You may also need to check the box if you purchase NFTs, unless you use real money to buy the NFTs. You should work with a CPA to determine if the capital gains from your NFTs will be taxed at the collectibles tax rate, and to make sure you're checking the correct digital asset box on your tax forms. As in the case with every tax year, the IRS and legislators make changes to our tax laws and regulations. If you think any tax changes will affect you or your business, make sure you speak to an accountant who can help you sort through the government jargon and determine your best course of action. Thanks for watching. If you found this video helpful, please comment below what you'd like to see next. See you later.